Hello viewers, welcome back to my channel. In today's session we are going to discuss the concept of income, section 2 subsection 24 under Income Tax Act 1961. Income includes profits or gains. If any individual has earned any profit or gains, they are taxable if they exceed the limit. The difference between profit and gains is that profits are regularly occurring, like for example, if we are doing any business activities, the income that we earn, if we pay all our expenses out of it, the remaining amount will be treated as profit. Profit for business can be calculated monthly, quarterly, half yearly, or on yearly basis. In some cases, there may be loss, but if an business is existing means it must be earning profits. But gains are not regularly occurring. They occur only by doing some specific acts. For example, if we sell any of our property, at that time the income that we earn is called gain. It will be only once when we sell the property. In the same case, if we sell our shares, debentures, or any other assets, if we generate revenue out of it, we can call it as gains. Both profit and gains are considered as income and taxable under IT Act 1961. Next, dividends or interests. It means if we have purchased any shares or debentures of any companies, then we will get returns on them, right? They are called as dividends and interests. Usually we get dividends if we are the shareholders. It may be either equity shares or preference shares. Basically, returns on shares is called as dividends. And we get interest if we are debenture holders or bond holders. They are also treated as income in IT Act 1961. Next, C. Salary, bonus, commissions. If any person is a job holder, if he gets salary or bonus, that can be treated as income. And if any person is acting as an agent or a broker, the revenue that he gets out of it is called as commission. That can also be treated as income. Next, D. Special allowances. It refers to the extra benefits in the form of money given to the job holders or employees by the employer. Example for this can be house rent allowances, traveling allowances, etc. These can also be treated as income of a person and they are taxable. Next, E. Deemed profit. Actually, deemed profit is not the actual profit, but it is assumed to be profit. This is already the lost money or income that is gained back. Means once we assumed we are going to face loss, but that did not happen, or we recovered the amount. Best example for this is bad debts recovered. If we faced any loss in past due to bad debts and if we have recovered it, it can be treated as deemed profit. That can also be considered as income. Next, F. Amount received under Keyman Insurance Policy. First, let us understand what is a Keyman Insurance Policy. Keyman is the most important person in a business organization or a company without whom it is difficult to carry on the business transactions. So many of the business organizations take the insurance policy on the keyman of the business so they can face any uncertainty in future. This is called as a keyman insurance policy. Now, if this policy is matured and if we get its claim amount, that amount is treated as income in IT Act. Next, G. All sum of money, movable or immovable property received by way of gifts. It means if we receive any movable or immovable property in the form of gifts. Movable property can be vehicles like car or motorbike. It could be shares and debentures, etc. And immovable property could be land, buildings, etc. If we receive these in the form of gifts, if it exceeds the prescribed limit, it is considered as income. Other than this, we have to remember that income may be in cash or kind. Like I told before, assets can also be treated as income. Next, income must come from a definite source. It means that we must have proof from where this income has been generated. If the source is unknown from where the income is generated, that income cannot be treated as legal income in our country. Next, it is not necessary that the income which is regular is only treated as income. The income which is irregular is also treated as income in IT Act. We have to remember that the income which is earned illegally, it may be by smugglings, by bettings, gamblings, etc., is also taxed under IT Act 1961. Money collected by housewives in the form of small savings is not treated as income. And income collected in temples, donations, charities, etc. are not considered as income. Okay guys, so this was all about today. If you found it helpful, please hit the like button and subscribe to the channel. Any doubts can be asked in the comment section below. Thanks for watching.